Well, thanks again for joining us here on a Monday. I'm Marlon Bowling with you as we watch your ag commodity trade open up on the open trading for today on a Monday. Now, I want to bring in a little expert help to help us analyze what we're seeing today. Let's bring in Dewey Strickler of AgWatch Market Advisors. And Dewey happens to be based in Franklin, Kentucky, right on the Tennessee and Kentucky border. And Dewey, I have to admit, I have had a chance to travel through your area there, and that has to be some of the best looking corn I've seen yet this year.
Yeah, that's right. We've got some extremely good looking corn. I don't know of any places that you might say there is a bad field of corn. Everything looks pretty uniform.
Well, let's take a look at how the corn is opening up here this morning. This is kind of fascinating because early in the Globex trade last night, corn was down about 5 cents, and then it firmed up toward the morning hours. Right now, it's kind of caught in between. December corn now at 387 1/4, so that would be down 2 1/4 cents. It is off of its overnight low by about 4 cents right now. It's a couple of pennies away from its overnight high. In the soybean trade this morning, as we get things rolling, we have September now trading a half cent lower at 992 1/4, and that would be 7 cents off of its overnight low. We're within about 6 cents or so of our high. And November new crop soybeans quoted at $10 3/4 cents, and that is down 3/4 cents. So not too much of a move there. As we open up our wheat trade, let's take a look at Chicago. September down 4 1/2 at 506 1/4. If we look at the Kansas City market here on September, it is now trading 7 1/4 lower at 506 1/4. And let's take a look at that Minneapolis market. The Minneapolis has been going the other direction. It still is, but not by a lot. We have September Minneapolis wheat, the spring wheat contract. It's up 1.5 pennies, and it's now at 759 1/2, about a nickel off our low from the overnight trade. And we are now about 7 cents off of our overnight high as well. How are we opening up the cotton trade? Well, so far we have that December new crop contract gaining about 16 points at 66.74. Okay, let's bring back in Dewey Strickler of AgWatch Market Advisors. The way we're opening up seems fairly timid here. Dewey, what do you think is going to be driving the market here this week?
Well, there's going to be obviously a couple of things. One is weather's always a factor there. One thing that I saw in corn on the Commitment of Traders report that I was really quite stunned with, and that was a couple of weeks ago, we had the funds were short 415 million bushels of corn, and then last week come to find out after all that short covering that they have a long position of 250 million bushels. Now, this is a little bit concerning here because right now the market really does not have much to trade on here. I mean, you can find reasons to be supportive of corn here, but also, too, when you look at weather, we got the upper Midwest is pretty well more of the same. We're not going to be looking at record corn yields, obviously speaking here. But the market needs some kind of story to tell in corn. Corn probably lacks a little more of a story than what beans do here right now.
And, you know, we were talking about this in our last half hour about the fact that the funds were surprisingly long in the corn, wheat, and soybeans in that last report. But that is a delayed report, and that would have been as positions before that sell-off that we had on Wednesday and Thursday. Do you think they've evened it up now?
It's possible that they have. We won't know till this next Friday.
All righty. Dewey, if you don't mind, I want to pause for a quick little break and then bring you back and get your thoughts on how we're opening up our livestock trade today on a Monday. Our guest, Dewey Strickler of AgWatch Market Advisors. Don't go anywhere. We'll take a look at your cattle and hogs right after this. Back to our conversation here with Dewey Strickler of AgWatch Market Advisors in Franklin, Kentucky. Want to get your thoughts on how we're opening up our livestock trade. And Dewey, if you don't mind, let's go ahead and take a look at our live cattle board here right now, and we'll take a look at some live quotes to kick things off here for this week. So here we go. Let's run through them. On the live cattle trade, we have the August down 25 cents at 117.55. However, you have all the other months up, but ever so slightly. We have October up just a dime at 118.68. And now you have December up a dime at 119.10. Both of those are off of their lows by about 60 cents or so. We have February up about 18 cents right now. So very, very quiet trade to get things rolling. On the feeder cattle trade, on the opening markets here, we have the nearby August down 8 cents at 154.20. September up 10. Last trade now 154.18, and October up 13 on the day at 152.88. And then a quick look at our hogs, and then we'll bring in Dewey here. On the hogs, we have the August contract now down just 2 cents at 79.88. And now we have October now down a dime at 67.08. Both of those are off their highs by 40 or 50 cents here so far this morning. So a little bit of weakness in the lean hog trade. The cattle market just kind of treading water, I guess you could say. All right, Dewey, on the Friday night report from USDA, it looks like we had a few cash cattle sales out in the plains, kind of a cleanup type trade. It looks like it didn't really go anywhere from the prices that we had the day before. So now what?
Well, you know, when I look at the cattle market, Marlon, technically it looks like we're going to try to work up a little higher on the August, maybe get up to about 120, somewhere in there. We've got a couple of mixed things here. One is we got hot weather forecast for the next 2 weeks, which will likely curtail demand, but that's also going to have a bearing as far as weight gains as well, too. Box beef was down last week, and production is expected to rise for the third and fourth quarter. So that all being said, we're going to be looking at the market having a very long road trying to work up higher here. Like I said, technically we can maybe get a bounce up to 120. I don't know if we're going to get a whole lot more than that.
Okay, so we're looking at an August live cattle chart right now, and you pointed out that 120 area there. Of course, we have that big double top lurking above our current trading ranges, that's for sure. On the hogs, I wanted to ask you about the chart pattern that we're seeing developing on the lean hog trade here, Dewey. We had such a sharp sell-off in the last couple of trading sessions. Over $2 lower again on Friday on the August contract. How much trouble is that market in, or is that getting close to a support level on the technical basis?
I don't think we're at a support level here right now. So far today, we got an inside trading day working here. This market looks like wants to come down and test those support levels that we had a little bit below 78 cents.
Now, you talked about the fact that the beef cutout values have been weakening up consistently here lately. I'm looking at the pork carcass cutout values, and as of Friday afternoon, USDA said that the pork values were actually up about 81 cents in value. So that should be a little bit supportive, shouldn't it?
Yeah, it's going to be supportive here. I think also, too, the trade's going to be looking at the seasonal tendency is for pork values to start to put a peak in here. So that being said, this market still looks like we got a little bit lower to go here.
Wondered if you had any thoughts on how we were going to be doing as far as our grain and livestock market heading into the reports, but I guess we're basically out of time. Real quickly here, Dewey, if somebody wants to reach you, what's your phone number here?
I can be reached at 270-586-9051.
All right, so we'll save that for another time. We're talking with Dewey Strickler today. He's with AgWatch Market Advisors. AgWatch.biz is the website if you want to check out his website. He's got some good stuff on there, too. So we're off and running.
All right. Thank you very much, Marlon. Appreciate it.